Good morning and welcome to this weekly market update from MRC Markets. Today's the 4th of August 2014. What I'm going to do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just going to review what happened in the markets last week and give an outlook for this week ahead. I'm not making any trade calls recommendations in this video. Do trade at your own risk. If you can please read our full disclaimer, which is on our website at www.mrcmarkets.com, then that will be most appreciated. And for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100, and the gold is a 200 simple. Right then, okay, let's quickly have a look at the Forex calendar. So just going to have a look at what is out this week in terms of the economic data. I'll just focus on the sort of high impact data, otherwise we'll be here all day. So yeah, what's going on? So overnight already at 2:30 am with the Aussie retail sales that came in better than expected. At 9:30 GMT with the UK construction PMI numbers. Tomorrow we have some more overnight data. So we've got the Australian trade balance, we've got the cash rate and the RBA rate statement out from Australia as well. At 9:30 GMT we've got the UK services PMI this time. At 3 PM with the US ISM non-manufacturing PMI, and in the evening for anyone who trades the New Zealand dollar, we've got the employment change quarterly figures and the employment rate numbers as well. And then on Wednesday, more UK data, so at 9:30 am with the UK manufacturing production month-on-month numbers. At 1:30 with the Canadian trade balance and the US trade balance. And then on Thursday overnight, we've got more Australian data, so the Australian employment change and the unemployment rate. And at 12 PM we have big UK data, so we've got the asset purchase facility and the official bank rate numbers, both expected to stay the same there. And then at 12, and what follows that is the MPC rate statement, of course. At 12:45 PM GMT with the Eurozone and the minimum bid rates, that's expected to stay the same as well at 0.15%, those low percentage numbers there. At 1:30 we've got the Canadian building permits month on month, expected a much weaker number here than previous, so forecast is minus 1.8%, the previous was 13.8% there, big difference. At 1:30 GMT, after the Canadian, well, about the same time as Canadian, we've got the ECB press conference, so very big, well not big piece of data, but a big press conference, so to keep an eye out to see what Draghi has to say. It'll be very volatile, of course. And at the same time, we've got the US, the weekly jobless claim, so forecasted just a tad above the previous there. At 3 PM with the Canadian IV PMI numbers. Then on Friday, more overnight Australian data and we've got the RBA and the monetary policy statement, the home loans as well. And from Japan, we've got the monetary policy statement as well. And tentative overnight, got the Chinese trade balance figures and the BOJ press conference as well. And then to round off the week, we have Canadian employment change and the Canadian employment rate numbers as well. So, and actually on Sunday got Chinese CPI as well, so keep an eye out on that. So lots of data out this week. Of course, it's the first week of the month, so always lots of data out, always pretty much the best week of the month, I think. Normally more volatile, more volume as well. So yeah, it should be an interesting week as normal, really, for the first week of the month. Right then, let's have a look at the charts and see what's going on. So this is the Euro dollar chart, and what have we been speaking about is this fib here, and we've finally come down here. So remember, we did have the 38.2, which came around the 135 handle. So we've got a brief bounce here, but this is primarily why, especially on these videos, I just look at the sort of 50% and the 61.8 fib, just look at it as one sort of fib retracement zone, because personally I think you get a better bounce off of the 50%. Of course, it doesn't have to really bounce up high now, but you can already see the amount of orders that have come in at this 50% level, pretty much to the pip there. We've already had a spike low buyers coming in and pushing it high there and closing above the 200-week moving average. So lovely. I mean, it's not the greatest of reversals, but in terms of a lower wick, I mean, that's a pretty decent reversal candle there. So in terms of the bias for this week, in my opinion, I think it has to be towards the upside. And over the next couple of weeks, I would not be surprised to see it come back up and test the 50-week moving average here. So key bounce we had last week, and of course that's the sort of key line in the sand already for this week. If it does start to retrace down, then yeah, this 50% was at 133.69, so pretty much the 133.70s there. So in terms of fibs towards the upside on the weekly, it's all about that move, and we've been speaking about this for a long time now, well, pretty much all year. Since we got that sort of big reversal candle there, remember, the odds of Roy's, in my opinion, sort of retraced down to a healthy retracement level, and we finally got down to it. In terms of fibs towards the other side, so the counter move, the first counter move, in terms of this weekly, I think the only one actually, to be honest with you, is this one here. I mean, a lot of people look at this smaller one here, which I think is a bit more valid on the sort of daily chart there. But in terms of the weekly, keeping it nice and simple, the counter move of that other fib move is this one here, I think. The 50% comes at 1.3679.9 there, so pretty much 1.3680s. And interestingly, we have a previous resistance at this level as well. So keep an eye out. Well, I'll definitely be keeping an eye on that fib if we do get some sort of bounce over the next couple of weeks. Just to sort of recap what's going on with that move. So in terms of the daily chart, that's the same sort of fib move there, you can see. But then this is the smaller one that I spoke about. Well, we've spoken about this for the last sort of couple of weeks, this move, because the reason being we're taking that that recent swing high is that move there, which came off a 38.2% retrace. So the next sort of swing high, I think, which I'd have thought a lot of people will be looking out for. So we should get some interesting price action if we do get to the 50%. And interestingly, it coincides with previous support around there and previous resistance as well. You can see that candle there. So this 50% comes at 1.3533. So if we do get some sort of rotation towards the upside this week, which I think is very likely, then that should be an interesting move to keep an eye out for. And it's the same thing on the 4-hour chart, to be honest. In terms of the 4-hour and the 1 hour, there's no sort of key sort of swings, I don't think. So yeah, if you flip it to the 1 hour chart, I mean, the key sort of the key levels you're looking at really in the current sort of levels, you've got the 133.74s there, and that's quite evident on that daily chart as well. That's pretty much the support low. So it's basically that 50%. And in terms of this, so it's tricky to sort of point out any sort of key sort of fib. So I mean, in terms of this 1 hour, I'd say I'd personally look at that low there. Interestingly, actually, that the 50% coincides with that previous high there, pretty much to the pip. So if it does sort of start to flag down, which it is currently doing, then I'd keep an eye on that 50%, and that coincides with a nice round number, being the 134 marker. So right, that's pretty much it on the euro. Let's flip it to cable and what's going on. You can see, surprise, surprise, we're starting to get a more healthy retracement down. I mean, it's been due a healthy retrace for a while, obviously a very long uptrend, and of course, I mean, markets do tend to retrace much quicker, definitely towards the downside, than they move towards the upside. You can see the famous sort of quote is going up via the stairs, coming down via the escalator, and that could be, well, it's currently already quite evident on this cable chart already, and I would not be surprised to see over this year this fib to come into play. Of course, we're still a long way away from that, but I just wouldn't be surprised to see it, because it's such a sort of a pure uptrend. And of course, we do have previous support at this 50%, and it coincides bang on the 160 marker. So I think it would just be a lovely fib if we do get down there, but of course it doesn't have to. I mean, the other sort of fibs to look at, in my opinion, in terms of this weekly chart, would be that one there. So that's the fib from the low of the year to the high of the year, and we do have previous support at that level as well, and previous resistance. So that could be quite an interesting one. What we have been speaking about though is these smaller dips here, remember. So that's the first dip there. We had off the 50% of the pip, and if you extended your high, you extended your low, you got that one there after 61.8. And if you extended your high again, extended your low, then bow off the 50%. So the next one we're looking out for was this move here, but of course that's just pretty much broken down now. So in terms of the bigger moves on this weekly chart, I think that's the first fib move there to definitely keep an eye out for. And I wouldn't be surprised to see some interesting action at that level if we do get there. I mean, it could easily get there this week. So yeah, keep an eye on that. So that's the first fib move there. On cable on the weekly, and that's the other move there, but of course we're still a long way away from that one. In terms of the daily chart, it's pretty much the same sort of thing. So of course we've got that smaller fib there, and then we've extended the high and then extended the low, so you've got all these small dips have been playing out. So in terms of that weekly move off the low of the year to the high of the year on the daily chart, you can definitely see it clearer, and it's pretty much that there. So interesting action definitely at this previous the previous support, which coincides with this 50%. Interestingly enough, and what wouldn't surprise me in terms of this fib not holding out, is we do have it. We've had a daily close below this 100-day moving average and really starting to fall down. You can see this 100-day moving average has been holding out all year. So it'd not be surprised to see get some quick move down to this 50%, but of course we do have this 200-day moving average coinciding with this 50% here, so if we do get it down here, then we could get some interesting action, but it's going to be a lot of buyers going to have to come in here, I think, to hold this one up, because if you just look at it on that weekly chart, it just looks like we could easily get a quick free-for-all down towards that bigger move there, but you never know. It's all about keeping an eye on the action and just seeing what happens. In terms of the counter moves, so let's say if we get any sort of bounce up where we are currently, then it's pretty obvious which fib you got to look out for there, and that's in my opinion it's the high of July. So let's say if we get a bounce now, then it's that low there, but of course just it's sort of extended down to wherever it goes down. But that's definitely the swing high to look at, I think. And interestingly, we have previous resistance at that level as well, and that current candle you can see previous resistance there and previous resistance around here as well at that similar level. And surprise, surprise, it coincides with a nice round number being 170 there. So key line in the sand for the week. In terms of the 4-hour chart, same move, nothing else major. So I mean, in terms of looking at any sort of recent swing highs, there just isn't any, I don't think. That's obviously the same for the 1-hour chart as well. Nothing clear sticking out there. So I'd personally just look at those sort of key fibs, and then just looking at the sort of round numbers really in terms of you sort of intraday trading. Then it's all about looking at the round numbers. So the next sort of one, you got 168. See if we get any sort of bounce off of there, and yeah, just a sort of 50 pip increments really, but nothing really is pointing out. So in terms of the fibs, we've spoken about the fibs, and we've spoken about the key round numbers there in terms of what they coincide with. So the 170 is definitely a key one to look out for if we do get any sort of a bounce up there on cable. Dollar Swiss on the weekly chart, what's going on? It's continuing to grind higher, of course, with the weekly close above the 50 week moving average. So odds are, I think, that we're going to get grind up towards this 200 week moving average and the 100 week moving average as well. In terms of the weekly fibs, it's all about this move here, I think. The fib from the high of 2013 to the low of 2014. Of course, we're still some way away from that, but that 50% comes in at 0.9268. And I wouldn't say there's really any sort of key fibs towards the upside. I mean, apart from that one there, but that's already played out. So in my opinion, the next one to look out for is a smaller one here, taking that low there. And of course, we spoke about this same thing on the daily chart as well. So I remember looking at that smaller fib here, which played out. That small one there. So not be surprised to see a lot of people looking at that low there and taking that high out there. Interestingly, that 50% coincides with previous resistance as well, and it coincides with a nice round number being 0.90, so that'll be a big option expiry level, I'd have thought, with the big long-term traders there. So yeah, in terms of the 4-hour chart, same thing, nice and easy, nice and simple really. It's just the low of the 4-hour chart zoomed in to the high of the 4-hour chart, and it does look like it's good. I mean, it looks like it's in pretty much retracement mode at the minute. Even the previous 4-hour candle is quite sort of bearish candle. So if we do get some closes below this 50 SMA, then not be surprised to see it retrace down to 0.90 handle and get some interesting price action there. So that's definitely a key fib to keep out, keep an eye on, I think. Aussie on the weekly starting to look quite bearish now. Of course, it's been struggling for some time to get above the 0.94 50 handle. As you can see, multiple weekly tests of the 0.90 50 handle and failures to get a weekly candle close above, and you can see we're starting to come down now. Last week's weekly candle is pretty much a standard retrace candle, although do bear in mind there is a bit of lower wick on that, but still, I mean, it's closed above the previous sort of 6 weeks candles there, closed above big support. So I definitely think we'll see this 50-week moving average get tested here over the next, maybe this week or even next week, and I would not be surprised to see it over the next few weeks to come down to this 50% retrace level on this fib from the low of 2014 to the high, and that 50% comes in at the 0.9081s. So in terms of the shorter term time frames, I mean, it's nice to keep the perspective in mind. In terms of this daily, it's that I'd keep the same thing, to be honest with you. The only other things I'd look out for are just moves towards the downside, because I do think it's looking very bearish. So on this daily, and I'll flip it to the 4 hours as well, it's going to be the same move. It'd be that swing low there to swing high, I think. Should be an interesting one. It's the same on the 4 hour as well, so nice and simple on the 4 hour chart zoomed in here. So it's high of the 4 hour chart to the low of the 4 hour chart. So it's pretty much, yeah, that high of that week in July to the low of last week. And that 50% comes at 0.9372s there. So that's it on Aussie. Let's have a look at the gold chart of what's going on. Still the same move, but interestingly, instead of it getting any sort of support, the 50%, we had some lovely support at the 61.8% retrace last week, and this was on Friday. It's some really interesting price action here after non-farm payroll. So we had a weak number, and it initially popped up, but then it came back down. Lots of stops got taken out, I'd have thought, and buyers came in, bang, straight out that 61.8% retrace, which was also previous support on Thursday as well, pretty much to the pit. So a brief sort of spike there on Friday off those 1280s, which, surprise were previous support around here, remember, in April. Lovely support, those 1280s, and you can see we're now above the 50% retrace at 1292s now. So a lovely price action there off of a nice clean level, and interesting, that was previous support as well, remember, look around there in sort of June. So huge level 1280s, so not be surprised to see it continue to sort of rotate higher here. Of course, it has been selling off and making lower highs here, but I mean, even looking at that weekly chart, let's just zoom in here so you can see this fib a bit clearer. Lovely action there. Lower wicks, buyers still coming in here trying to push it up, but of course sellers are coming in at this sort of trendline resistance here, but I don't know, I mean, it's a pretty pure fib here in terms of lovely move towards the upside. Standard retracement, lower wicks forming, buyers coming in, keeping it above these key levels here. I'd not be surprised to see a pop and a weekly close above that trendline resistance this week, and then I think we could be flying up towards this 0% line over the next sort of few weeks. But of course, initially we definitely need a daily close above, and of course this 50-day moving average as well is going to be a key resistance, I'd have thought. So yeah, that's a key indicator to keep an eye out for this week, definitely, I'd have thought. Okay then, that's all for this week. I hope you found that video useful. If there's any other pairs you want me to take a look at next week, then feel free to comment under the YouTube channel under the video, or send us a tweet to our Twitter feed, which is at MRC_markets. I hope you have a great week trading, and I'll catch you next Monday. Thanks for watching.